Okay, welcome to the Swing Trading with Cycles channel. We're doing individual silver miners series. This is Pan American Silver, PAAS. I will say, not to bury the lead, this one looks horrible, right? So let's jump into it, right? Let's start with the annual chart, right? So this one has quite a good amount of history. Our first candle is 1995, and this is your annual chart. So each candle is an entire year of price action. If you are familiar with this channel, you know I love these charts because it gives you the big picture, reduces noise. Because all the patterns that work on all time frames. So when you see a pattern on the annual chart, my God, that's an important pattern to pay attention to. And so, again, this green candle here that I'm hovering over right now on the left-hand side is 1995. This big, ugly red candle is 2022. And we obviously are very close to this candle closing since, whoops, I should say it is November 28th. So we just have a few more days to trade in November, and then we'll get the final December trading, and then this candle will close out. And so 2022 is almost over, and we have a good sense of how 2023 is going to kind of open based on this. And so first thing that I will draw your eye to is that we have a swing high on the board on the annual chart, on the yearly chart. The general principle is that the higher the time frame, the more important the signal. So when you get a signal on an annual chart, that is really important. So if it's bearish, it means you probably want to run for the hills, right? So I've marked the swing highs with arrows here. And really all this means is it shows you below the level, and you see I've drawn the line. So like this swing high that happened in, what is that? 1998 was activated below $5.31. We did eventually drop to $2.41. This swing high was activated below $20.80, right? And you know we went on to have a multi-year decline that eventually bottomed at $5.38. So you can see you'd save yourself a lot of money if you pay attention to that pattern. We have that same pattern here. I'm going to get rid of these lines so it's easier to see, right? And just to be crystal clear, it means we broke below last year's low. Last year's low was $21.39. We're down here at $15. So we're already down quite a bit from that low. But there's more downside to come, folks, because this kind of pattern is targeting this area, like around $11. So that's that's something like another 30% down. And there's no guarantee that we don't find ourselves down here in the $5 area. I'm not saying that we will. That's the kind of downside you're opening yourself up to, though. So again, this pattern is screaming at you. Mitigate risk, whatever that means for you. I'm not giving financial advice here. I'm telling you what the chart is telling you on an annual level. This thing is heading lower. So that's your annual chart. If we look at our quarterly chart, we're going to get much of the same signals. So I'm not going to belabor the point here. But the quarterly chart helps you see the swing highs a little bit better, right? And like you get more precise, like when exactly did the swing high happen? Like I know it happened this year, but like what quarter did it happen in, right? And you can see since this swing high here that happened, the July in 2020, right? So that was your top. You had your little rally off of the COVID high, and then my God, look at this textbook downtrend, right? And this is on a quarterly chart. So we make this low. We have a 2 or 3 quarter rally. That's a decent amount of time to rally. Faked a lot of people out. It's a lower high. Boom. So what do we expect to happen? Another lower high, and then another lower low, another lower high. Now, at some point, this may reverse. I mean, you get an uptrend. Doesn't mean we're just going to kind of go down to the floor, but that's how it would progress, right? Just like this lower high here. Caution, caution, caution here. If we zoom down to a monthly chart, what's happening here? So again, we just get more precise with the swing highs on the monthly. Actually, this is your most recent swing high. So the most recent swing high that we need to conquer is the one that happened in October. That was a high of $17.48. And you can see this lower wick tells us we are rallying here a little bit. And so we'll zoom in and see what does that mean. So on the weekly chart, let's just kind of get a sense of the weekly cycles here. We'll do that relatively quickly. So this is coming off the COVID low, right? have a bottom like here maybe. Then you have another cycle that goes, yeah, this is like really messy, right? But like you could say this was a really long one at 44 weeks, right? And then you have this one that was really short, right? Then you have this other one that started here, has a top on week 12. And then it's like, did this bottom on this week, right? And now we started, so that's interesting. So this suggests that we may be in a new cycle that started on week of September 6th, had a top on week 5, and this is currently week 13. So like this would be your high, right? This is very speculative, but also as we just reviewed from the yearly, the quarterly, and the monthly, this thing is trending lower. So in some ways it doesn't really matter, but that would be your last like your last ICH or weekly swing high. And if you think about it, like if you kind of really look at this visually, I mean, this is a bear flag, right? And you'll notice I don't talk about those patterns as often because I don't find them super helpful always. But let's see, there's a trend line. There it is. Like this is a bear flag, right? Now the reason why I don't talk about them as much is because it's not as important. It's not as useful and not as precise as thinking about swing highs and swing lows, higher highs, higher lows, that kind of thing. But that's what this is, right? This is a bear flag that is just to like, not to belabor the point, but this thing is probably going to spill lower, right? Now, there's probably something idiosyncratic happening here, that this isn't indicative of silver as a whole, because as we've reviewed for other miners, they're not doing this poorly. And on the daily chart, this is your last daily cycle low. And we just talked about how the weekly cycle was maybe a little bit unclear. And that's an important concept. Sometimes to get a clearer picture, you look at a smaller, or I should say a shorter cycle, or you look at a higher cycle. In this case, looking at the daily cycle makes it more clear. We had a daily cycle low on November 9th. And so 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So far, we have a top on day 10. Doesn't mean that we definitely have topped out, right? But so far, it is a swing high, right? And again, I hope this is all making sense. And if you're not familiar with swing highs, definitely take a look at the content I created around that. Specifically, an incredibly important concept to understand. Will save you literally thousands. So once we fell below this candle that marks the high, so that's below $15.38, and that just happened today, right? We created a swing high. So it could be that this little daily cycle is already rolling over. I mean, look at these other rallies. That was a short little rally that petered out. That was a short little rally that petered out. That little rally. So would not be surprising to see this is a 5-day rally that just has sort of crapped out. And not to belabor the point, but let's just look at the ratio charts. So ratio on the right-hand side, ratio PAAS to SIL. On the left-hand side, PAAS itself. And you can see this is your annual chart. We'll zoom into the ratio chart here. We have a swing high on the annual ratio chart. So not only do we have a swing high in absolute terms, but we have a swing high in relative terms, which is another way of saying it's going lower in absolute terms, and it's one of the worst performing of the bunch. Just all not great news. That's your monthly picture. My God. Oh, Jesus, that's ugly. How do we look on the weekly? Ugh. Yikes. So I don't want to belabor the point here. Like at some point this probably reverses, but all right, like we'll have to wait to see some kind of signs of that. So if nothing else, this is an important sort of PSA that if you're in Pan American Silver, you want to think about controlling risk here on the next rally. Maybe and certainly if you're thinking about adding, I would rethink that. But we'll leave it at that. Definitely have a few more miners to review, and certainly take a look at the ones we've already reviewed as well. There's a lot of dispersion out there in terms of performance between miners. And I'll call out, before we end this video, Newmont. Like, look what Newmont did. My God. Look at this monthly chart. And know that Newmont is one of the biggest weights in GDX, or at least it certainly used to be. And so it's going to distort the performance of GDX by definition. And so if nothing else, now it's more important than ever to like think about individual miners. And in this case, this is one that you'd want to avoid, obviously, Pan American Silver and Newmont for that matter. So we'll leave it at that. Thanks again for watching. And if you haven't subscribed already, definitely do that. I would recommend you hit the notification button as well and like the video if you found value as well. Appreciate you watching.